Do you want to make generational wealth as an investor? Then do as we say in the crypto community, BTFD, buy the dip. What's up, everybody? I'm Scott Melker, also known as the Wolf of All Streets, and today we are going to talk about acquiring generational wealth through buying the dip.
Come on, push it, buy the dip, here we go, come on.
Buy the dip is an age-old mantra used by traders and investors to describe the activity of adding to their portfolios when the price of an asset drops.
Sell down in April at 142!
It has historically been proven to be one of the best ways to compound wealth, especially when combined with dollar cost averaging, which passively forces you to buy every dip. To illustrate the power of buying the dip, look at this chart showing the Dow Jones Industrial Average since 1896. There have been a number of crashes, bear markets, recessions, and corrections over the last 125 years, and I have marked each of the most notable events on the chart. As is painfully clear, every single dip, including the Great Depression, was an opportunity for cash flush investors to buy stocks at extreme discounts with a long time horizon. With the stock market presently near all-time highs, there has literally never been a bad time in the history of the stock market to invest in equities. The wealthiest people that I know were the ones who were cash flush in the Great Recession, 2008 to 2010, and were buying up stocks and buying up real estate when everybody else was scared. They were buying the fear and not panicking, and those were massive investments over the next 10 years. Of course, the chart above does not account for inflation, and when you adjust it, does not look quite as amazing, but that's topic for another day. So when viewed through this historical lens, you can see how essential it is to zoom out and consider a multi-decade time horizon for investments. Patience is, in fact, a virtue. You not only have to buy the dip, but you have to hold on for a very, very long time. Get your money into the market and do not touch it. As Warren Buffett once famously said, the stock market is a device for transferring money from the impatient to the patient. Short-term decisions are what make investors lose money. If you're not willing to own a stock for 10 years, do not even think about owning it for 10 minutes. Warren Buffett knows what he's talking about. Markets always trend up over time. Depressions, recessions, and bear markets have always been temporary and are the best buying opportunities for the bold. Does this work with Bitcoin? Well, let's apply this logic. Imagine the Bitcoin chart ultimately reflects similar growth to the stock market over a long time horizon. Logically, there's no reason for this not to occur, right? Markets trend up. Considering this, it's likely that we are very, very, very early. Even with the 10 years that Bitcoin has been around, it's already showing these signs. Had you bought at any of the dips, you would have either a 2x, 10x, or even 100x more on your investment already. We've seen it time and time again. Again, as I said, patience is a virtue. The most important rule here is patience. It is impossible to call the top or bottom of any market, let alone one as volatile as crypto. Just recently, we saw a dip of almost 30% in a couple of days. With daily volatility sitting so high, one needs to zoom out, as I mentioned above. When in doubt, zoom out. Think on larger and longer time horizons. This means buy the dip mantra is for long-term investment, not to pay your daily bills as a trader. Now, I recently interviewed Peter Brandt for Trade Gods, and he touched on the idea of patience in markets and buying the dips. You can hear it here in our interview.
Buy companies like Apple Computer, Walmart, Domino's Pizza, Honda, German companies. Buy them and hope that they go down 50%. Because you can dollar cost average your whole life.
We're actually seeing this strategy playing out with big investment firms, specifically Square and MicroStrategy. Square recently announced that the firm had added another $170 million to their balance sheet of Bitcoin during the dip. The same day, MicroStrategy announced the purchase of an additional $1 billion in Bitcoin and have since bought even more. Smart investors understand that a dip is an opportunity and not a time to be scared. If you buy the dip and hold on for dear life, you can acquire generational wealth just like the pros.